Sometimes you just feel tired, you feel weak. And when you feel weak, you feel like you want to just give up. But you gotta search within you. Try to find that inner strength and just pull it out of you. And get that motivation to not give up and not be a quitter. No matter how bad you want to just fall flat on your face. Till I collapse, I'm spilling.
In 2012, the U.S. Mint has currently to date sold $460 million worth of silver eagles and $470 million worth of gold eagles.
Yeah.
I mean, how long can the silver to gold ratio stay at 55 to 1 when the silver eagle sales are set to surpass the gold sales?
Yeah, well, Doc, that's always been my argument, right? That even in all of 11, I think the silver sales exceeded the gold sales in dollars, which means when the ratio's, as it is today, 56 to 1, it means people are buying 56 times the physical volume of silver as gold. And when you analyze the availability in the physical sense of gold and silver, we know that there's about 70 million ounces of gold available per year for investment, because very little is used in the industry. I would argue that at the extreme, we could say there's 450 million ounces of silver. I'm using 900 as the total silver market, and I'm saying there's 450 available for investment. And in investment, I'm including jewelry and things like that. So the ratio 450 to 70 is there's 6.5 times more physical silver available to buy for investment versus gold. But people are buying it at 56 to 1. And in the case of our gold trust and our silver trust, we raised exactly the same amount of dollars in the issues we had in the first quarter. So we bought more than 50 times more silver than gold. Well, people can't keep doing that, okay? And this is people voting with their money, which I think the market should listen to. If people want to keep voting with their money, they're going to put as much money in silver as gold. The price is not going to stay in a 55 to 1 ratio.
Right. At some point, people voting with their feet and their money take up that excess supply.
Right.
I wanted to talk a little bit about your recent CNBC interview. I love that, Eric. The host implied that your views on gold might not be correct because people like Warren Buffett, Charlie Munger, and Bill Gates had recently given such negative comments regarding gold. I really loved your response. I think it's probably one of the most eloquent ways I've ever heard someone called an idiot. He replied that gold was the investment of the last decade. It blew away any investment you could make, including Microsoft and Berkshire Hathaway, probably by a factor of 500%. In other words, they missed the trade big time. I don't know that I should respect their opinion at this point in time. Right. And I definitely agree with that. And we all know that you did not miss the investment of the last decade, Eric. And you also perfectly, I'd like to point out again, you perfectly called silver's last major move from 18 to 49 back in the first few months of that move in 2010. So obviously your opinion on gold and silver should be respected as much or more than anyone's today.
Yeah.
In that interview with CNBC, I think you mentioned that you expected gold to reach 2,000 by the end of the year and silver to go back over 50 by the year end. I know we've had a couple big smashes since then. Do you still see gold and silver reaching those levels this year?
Sure. Doc, let me go back to the Munger comments and the Berkshire comments. Like I haven't even read what Warren Buffett wrote, but I wondered, why is this man writing about gold? Like, why? Why do you put that in why do you put in your annual report that you don't like gold? I mean, why don't you spend your whole annual report writing about the 99% of things you don't like? Because that would be a lot of writing. And it seems so perverse to me. And then to have other people who are considered financial icons coming out and bad-mouthing gold, it seems so extreme to me and possibly organized that in order to keep the system together, because of course gold is the canary in the coal mine, and if people go there, then the pressure on the central planners becomes extreme. And even before I get to your question about the prices, I've noticed that in the PIMCO last two letters that Bill Gross wrote, he is going more and more to hard assets and he mentioned gold in the last letter. And I just think of it this way. Okay, Bill, you're the bond king. Here's the bond king saying, maybe you should go to gold. How long will it take the mainstream investors who have so much money in bonds to try to put it into gold? And if they do, the price would go crazy because, as you know, we're already in probably a shortage of supply versus demand in all these markets. Well, that means the last guy in theoretically can't get in. And if all of a sudden the world's bond fund managers and balanced fund managers and even mainstream managers decide to get into gold, it'll just be a fiasco. There is no gold to buy. So anyway, that's my comments on what people in the mainstream are saying. In terms of, believing that gold can go to a new high and silver can go to a new high, I simply go to, you watch the financial chaos that's going on. You watch the volatility of the market. I watch a stock market that rallied 100% because we're going to have some sort of economic recovery, which in February we said the recovery has no close. And of course now we find out that recovery has no close. There's not going to be a recovery. We get warning after warning after warning now about the outlook going forward is not as cheery as we all thought it was. So the financial, and of course we have a desperate financial situation already, let alone that Europe's in a recession. China's industrial activity is in a recession. The U.S. is probably in a recession. Like, how do you keep this thing going here? So, I just continue to believe that the safest path is to own gold and silver. Any amount of additional investment in the area by the powers that be is going to have a dramatic impact on the price of these products. So I obviously think they should be above their old highs. And of course, as you might believe and I might believe, when silver was about to pop through 50 and all hell would have broken loose, I believe it was orchestrated to be knocked down. And we'll be back there again, and we'll go above it, in my opinion.
Yeah, I agree. And I mean, one thing that strikes me in your comments there, we're talking about, like you said, Gross, the bond king, and institutional bond investors starting to look at gold. I mean, that's still phase 2 of the bull market. We're not even talking about the average Joe on the street,
right,
telling his buddies and to go go invest in gold and silver.
Just think of the dilemma a pension fund manager is in. And just imagine today, try the Japanese pension fund manager. His stock market has done nothing for 25 years. His bonds have yielded nothing for 20 years. He has no return. And one fund he did, by the way, there was some pension fund in China that announced they're going to put 1.5% of their money into gold. And I said, well, thank God 25 years later you finally figured it out. But imagine in Germany today when 2-year bonds yield 0, the stock market will probably provide a negative return this year. How do you pay your pensioners? You have to buy something that can go up in value instead of something that goes down in value. And it's just a matter of time before this shift gains some momentum. And we see some early stage guys, mostly in the hedge fund business, and of course the Texas Teachers Pension Fund and a few others are going there. But it's a groundswell that's just going to pick up speed given time. And knowing what the physical demand supply is like, they're not going to get in without prices going a lot higher.
One last question for you. Most gold and silver investors currently seem to be basically kind of waiting for an official QE3 announcement for the next big move in gold and silver, but they seem to be kind of forgetting that the first 8 years of this bull market, there wasn't any QE, at least officially announced, and gold and silver didn't have any problems making big moves. So I guess what are your thoughts on what is it going to take to kick off the next leg of the bull market? Will it take official QE, or will basically just the financial events happening all around us kick it off?
Well, I wouldn't be surprised that I can't imagine Europeans are not buying gold and silver, okay? And I can't imagine that perhaps the Chinese aren't buying gold and silver when they realize the change in state of affairs over there. Plus, you see all these central banks, and now, Kazakhstan comes in and says, we're just changing our reserves from the gold from 12% to 15%. I mean, that's a pretty bold statement. Imagine if every central bank said that. I mean, there's just no way in this earth that the gold is available. So, and throughout the whole bull market, starting back in 2000, I always thought of it as a supply-demand thing in the physical markets, that yes, central banks would stop selling. Yes, they would become buyers, which they have. The hedgers would stop hedging, which they did. The ETFs came into existence, which they weren't. It's all been a physical market all the way, okay? The only people that associate gold with the financial markets are people who keep saying that everything's stable and fine and gold shouldn't go up. But the fact is that the physical demand for gold far exceeds the supply. I'm sure the central banks, the G6 central banks, have been supplying the gold. And, of course, now we have the tailwind behind us of, total folly amongst the monetary people by their QE1s and QE2s and LTROs and unlimited swaps and all the other, ingenious ways of keeping the system from doing what it would naturally do, which is to delever. And, of course, the delevering is devastating the banking system. And ultimately, in my mind, the real purpose for gold is you own gold because you don't want your money with a levered financial counterparty. And almost all the financial counterparties in the world are highly levered. And that's why they kind of disappear overnight, like Dexia got taken out over a weekend. Like Bankia, one day you pass the stress test and 3 weeks later it was broke. I mean, that's how fast it happens. So I think that we don't have to wait for QE3. They probably won't even call it QE3 because they'll come up with some other, acronym for what it really is. It'll be printing money, but they might change it somehow. We don't need to wait for that. You can look at all the data, and the data is overwhelmingly in favor of people buying gold and silver.
And that reason you listed for owning physical gold, that kind of rules out, at least in my opinion, owning something like GLD. Harvey Organ spoke to us a week or two ago and revealed some information that essentially implies that GLD's inventory has been rehypothecated several times from the LBMA. Basically, their prospectus allows swaps of the gold. Right. And it looks like they actually have gold inventory, but it's swapped from the Bank of England, which is probably leased it from Arab investors.
Right. Well, Doc, that's why we came up with our own trust, right, where the gold is held at the Royal Canadian Mint. If you have enough, you can get it. I forget what the minimums are now, but it's there to be purchased. We're not going to lever anything. And, of course, I've been a huge proponent of owning physical gold and silver for the last 12 years, and that's the only way to do it. It's always remember there's counterparty risk, and these counterparties, you can be shocked at how quickly you find out that they're not financially solvent, as we might find out this weekend how insolvent the whole Spanish banking system is.
Right. Obviously, holding it in your own personal possession is the best, but if you'd like another vehicle, we highly recommend yours over something like the GLD.
There's lots of advantages to that. Well, the biggest one is the gold's there.
Right.
Sure.
All right. Well, before I let you go, Eric, is there anything new at Sprott Asset Management or Sprott Money that you'd like to share with our listeners?
Not much new. I'm actually working on coming out with a Sprott coin, a Sprott 1 ounce silver coin, and we might come out with some various sizes of bars. It hasn't been 100% decided, but that's something I'm doing. But I would always encourage, to me the key thing is people have to own gold and silver, and they got to forget the day-to-day stuff that goes on in the market, because we know the paper markets are influenced by people who have absolutely no interest in the physical markets for gold and silver. So just stay the course. I'm sure we'll be happy to talk together 5 and 10 years from now, and we'll find out that owning these products was the most advisable thing to do in these very chaotic financial times. So have all your listeners stay the course.
Couldn't agree more. Thanks for your time, Eric. It's always a pleasure speaking with you and hearing your thoughts on the markets and the metals, and we'll look forward to speaking with you again soon.
Doc, all the best. See you later.